Westpac's chief economist believes Australia's house price collapse is done. Joining us now for his reaction to that, the executive chairman of Yellow Brick Road Home Loans, Mark Bouris. What's Bill Evans had to say? Do you believe it is done, Mark? Good to see you, by the way.
Good to see you too, mate. I think so. I mean, I'm a bit of a Bill Evans fanboy.
Yeah, me
Bill's
too.
Bill's got it right on most occasions, and what Bill's saying is that the March quarter increase, Australia-wide, on a national level was 0.8%, and he's saying instead of predicting from peak to trough, that is peak 2 years ago to trough, now, he was predicting a 16% fall across Australia. He's now gone back and predicted a 10% fall. We're probably there now. We've already gone down by 10% across the country. So therefore, he's basically saying from here on in, we're going to see price rises at a steady rate, steady clip, not much. Just
okay, so not a rush on, do you think? That leading to another boom?
Well, maybe there'll be another boom in due course, but right now he's just saying it's going to stay steady and just continue to rise. What could create a better than ordinary price increase, in other words, something more than 5% per annum? What could create that would be a continued influx of immigrants into the country, and a continuation of the massive undersupply of property in Australia. So there is a massive undersupply relative to the demand.
Conversely to that, the RBA's latest interest rate hikes have plunged hundreds of thousands of households into mortgage stress, Mark. The pain isn't equally spread.
No, it's not equally spread, and there are various postcodes around Australia, in Sydney, Melbourne, Brisbane, Tasmania, not so much in Adelaide or Perth, but certainly in the East Coast, and where there's 100% of all those people who were polled, which you can therefore extrapolate 100% of all those people in the area who have a mortgage, 100% of those people who are polled randomly are feeling mortgage stress right now. So places like Campbelltown in Sydney, there are many places in the outer west, and some Rooty Hill and places like that are also experiencing mortgage stress. And there are places in Melbourne, but it's not spread equally across Australia. So there are plenty of places that are not actually feeling any mortgage stress right now.
Okay, yeah, turning to our attention to the RBA today, and in particular the inflation data for March that's out today, Mark. So how do you expect that to be? Some suggestions it'll drop from 7.8% to 7%, which shows that current measures are on the right path. Your thoughts on where they'll land today and what the RBA will do as a response?
Well, I'd be surprised if the inflation rate is not decreasing as it has been over the last couple of months. I'd be very surprised, because we are we just talked about the mortgage effect, the high interest rates, and they're affecting people all across the board. So I'd be very surprised. But equally, it is very stubborn, and prices are still rising. By the way, they're just rising at a slower rate.
Yeah.
And what we want to do is get it down. I think we'll keep the pause there if we can see the inflation rate come in somewhere below 6.8% today. That's what I'm hoping. That's what I've got my fingers crossed. If it's beyond that, if it's above 6 point, in other words, up in the sevens, I think we're going to see an interest rate rise.
Okay, we'll watch that closely. Mark Bouris, good to see you. Chat to you soon.
Bye, mate.